All right, let's jump right into this explainer. Today we're unpacking something that honestly feels a bit surreal: the structural unraveling of Europe's supposedly crisis-proof economy as we head into 2026. You know, for decades, Germany was the ultimate economic miracle. They made fiscal discipline look incredibly easy, running these legendary surpluses while the rest of the world was just drowning in debt. Made in Germany? That wasn't just a label, right? It was literally the global gold standard for manufacturing. But the Germany we're looking at today is radically different. We aren't watching some sudden, flashy financial crash. It's much slower and honestly, kind of way more frightening.
Take this number, for example, 125,000. That is the staggering number of German industrial jobs cut in just a single recent year. That's huge. This isn't just your standard bad quarter or some normal cyclical downturn where you just wait it out and make a few policy tweaks. No, this is a glaring red flag signaling a fundamental unwinding. We're talking about the high-skill, high-wage manufacturing jobs that basically built the entire German economy, and they are just vanishing.
So that brings us to the core question driving this whole analysis. We really have to ask ourselves, can the country that essentially invented the modern industrial economy bounce back? Or are we actually witnessing an irreversible decline? To figure that out, we've got to look at the data, the corporate exodus, and specifically the absolute collapse of the foundational pillars that made Germany invincible just a few short years ago.
Here is our roadmap to deconstruct this house of cards. We'll hit 1. An unthinkable economic crisis. 2. Germany's 3 fragile pillars. 3. The simultaneous pillar collapse. 4. Compounding the structural damage. And 5. The global ripple effect.
Starting off with Section 1, an unthinkable economic crisis.
We are staring down some truly unprecedented economic stagnation right now. Contractions of 0.3% in 2023, another 0.2% drop in 2024, followed by what you can only call a mere survival-level 0.2% growth projected for 2025. That is 3 consecutive years of economic failure, or at best near total stagnation. I mean, the Handelsblatt Research Institute literally called this the greatest crisis since World War II. Think about that. Nothing like this has happened in post-war German economic history.
Moving into Section 2, Germany's 3 fragile pillars. To really grasp how this powerhouse fell so hard, we need to rewind a bit to the 2010s, when Germany seemed to have completely cracked the code on being this unstoppable, high-wage manufacturing giant.
And here is the absolutely crucial takeaway. This legendary economic miracle was quietly resting on 3 highly vulnerable pillars. For decades, Germany built this massive empire, but it was fundamentally reliant on some very specific external forces. Pillar number 1, cheap Russian gas. They fueled their massive industrial output with it, a totally deliberate policy choice to keep factory costs rock bottom. Pillar number 2, the Chinese consumer market. They relied on China to act as this infinite sponge for their high-end exports, especially luxury cars. And pillar number 3, the internal combustion engine. They banked heavily on their undisputed mastery of traditional auto mechanics, assuming mechanical engineering would just always be king. It was a perfectly balanced triad, but man, it held a deadly dependency.
Which brings us to Section 3, the simultaneous pillar collapse. And the true tragedy here? All 3 of these pillars disappeared at almost exactly the same time. The house wasn't just hit by a storm, the entire foundation just gave way.
Let's look at that first pillar, energy. For decades, Germany built up this massive dependency, where roughly 35% of its entire energy supply came from cheap Russian gas. Well, when Russia invaded Ukraine in 2022, boom, that pillar vanished entirely. Overnight, European energy costs surged, leaving German industry paying vastly more than their competitors over in America or China. It got so bad that companies like Michelin are literally closing down sophisticated factories, openly stating they just can't export at competitive prices anymore. The German Industry Federation is actually calling this a scenario of creeping deindustrialization.
Then we have the second pillar, the Chinese consumer. For 20 years, China was the single biggest engine of German corporate profit. Top German auto executives built entire global strategies around the mind-blowing fact that between 30 and 40% of their total global profits came from China alone. They just kind of assumed Chinese consumers would always, without fail, prefer German engineering.
But wow, that assumption turned out to be a catastrophic miscalculation. As Chinese buyers aggressively pivoted to domestic electric vehicles, brands like BYD and Xiaomi, German market share just fell off a cliff.
It plummeted from over 30% down to a shocking 13.1% in the first half of 2025. Get this, in the critical EV segment inside China, giants like VW, Audi, BMW, and Mercedes combined now hold just a 5% market share. 5%.
The situation is so severe right now that analysts are actively calling this Germany's Detroit moment. And honestly, the comparison to that historic American auto crash is profoundly accurate. This isn't just one bad sales year, right? It's the structural collapse of a core national industry that completely failed to see a massive technological shift coming their way.
And that leads directly to the third crumbling pillar, a massive technology gap. Today, German vehicles are increasingly viewed by consumers as, well, excellent mechanical dinosaurs. They have phenomenal hardware, no doubt, but they're losing out to vastly superior and cheaper digital ecosystems offered by their Chinese rivals. Remember, this is a country that still famously relies on fax machines for official business. Decades of underinvestment in software mean that German products just feel kind of prehistoric to the modern consumer, and you really can't fix a massive software problem just by cutting manufacturing costs.
All right, Section 4. Compounding the structural damage. So the collapse of those pillars has triggered some truly catastrophic secondary crises in both labor and investment. Compounding an already severe aging workforce crisis, we're now seeing tens of thousands of those high-wage manufacturing jobs just evaporate. Volkswagen alone is slashing 35,000 jobs. Bosch is cutting 13,000. Ford completely closed down a plant to November 2025, erasing 4,500 jobs in an instant. Germany is facing this dual nightmare right now. Their birth rate has been below replacement level for decades, meaning way too few young workers are entering the market, while at the exact same time, their most vital industries are laying off the highly skilled workers they currently have.
You know, you're in deep trouble when your own corporate champions start throwing in the towel. It adds immense gravity to the situation when the CEO of Siemens, a literal 82 billion euro iconic company, looks the German parliament in the eye and tells them directly that their home country is no longer worth their investment capital. It's brutal. The competitive advantage they built over decades has been totally eroded by skyrocketing energy prices and that digital lag we talked about.
And this loss of competitive edge, it compounds aggressively over time. You go from the industrial peak in the 2010s to sudden energy cost explosions in 2022, which leads straight into contracting investment today. And here's the brutal on-the-ground reality of creeping deindustrialization. Without new factories or fresh tech being built locally, the workers getting laid off from these old industries have absolutely nowhere new to go.
Let's look at Section 5, the global ripple effect. We really need to talk about why this matters to you, because Germany's decline, it is absolutely not an isolated event. It's a critical indicator of global industrial health. Just think about the sheer scale of this for a second. Germany powers roughly 25% of the entire European Union's GDP. When an economy that massive stagnates, the entire European industrial supply chain feels that tightening effect immediately. When German factory orders fall, Polish and Czech suppliers instantly lose contracts. When German companies stop investing, it drags down the whole continent at the exact moment Europe desperately needs economic strength to deal with global trade pressures and rising defense funding.
When you contrast Germany's current state directly against the major global players, it's pretty stark. You've got the United States dominating AI and utilizing cheap domestic energy. You've got China leveraging state-directed industrial policy to completely own EV and battery supply chains. And then you have Germany, bogged down by an energy crisis and severe digital lag. Their structural disadvantage right now is glaring. It's like they're fighting a modern war with outdated weapons.
Now, is it completely hopeless? Not necessarily. The ingredients for recovery, theoretically, do exist. The government has definitely recognized the crisis, even loosening their famously strict constitutional debt brake to deploy a massive new 500 billion euro infrastructure fund. And of course, they still have world-class engineers. But trying to transform a super cautious, consensus-driven political culture so they can execute a radical energy and digital transition, that moves agonizingly slowly. Ultimately, what you should take away from this explainer is that the old Germany is gone forever. That surplus-running, export-dominating miracle, the one entirely built on those three pillars of cheap Russian gas, a captive Chinese consumer market, and the absolute supremacy of the combustion engine, it is structurally finished. Assuming Germany will just magically remain Europe's engine without going through a massive, frankly painful and fundamental transformation is deeply, deeply dangerous.
So I'm going to leave you with this final thought.
Can an economy built on an outdated blueprint actually survive a world moving at the speed of artificial intelligence? Can a fundamentally different Germany be built fast enough to avoid permanent decline, or will the modern digital world simply leave it behind? Thanks for diving into this explainer with me. Keep questioning the data, and I'll catch you in the next one.